Let's bring in Anastasia Amoroso now of iCapital and Lauren Goodwin of New York Life Investments. Good to have you both with us. What are we supposed to do with the markets now? You know, we've got about 50% of the losses back from the February high to the post-Liberation Day low. Is there momentum still? Would you be more positive on stocks at currently or no?
Yeah, unfortunately, we're at this juncture where we can argue either side of the equation. I'm going to try to do that. You know, I think short-term patience is still going to be required, although I will say the fundamentals, the catalysts, and the technicals are starting to be better aligned. So let me just expand on that a little bit. You know, I think last week was actually pretty pivotal, Scott, because, you know, first of all, we got some positive technicals, and the fact that we have 61% of stocks that were advancing at some point on Thursday or Friday. So that snapback is very positive. And then also, Scott, we're now coming towards the tail end of the earnings reporting season, which means companies will be able to execute their buyback. So the largest buyer, which is the corporate, is going to be back in the market. So I like that. But of course, as I talked about before last week, it's not just about the technicals. That alone does not move the markets. It's about the catalysts. And the fact that we have, I would say, three categories of catalysts that are lining up positively. You've got trade deals. Maybe we're going to hear more on that front this week. We've got rate cuts. The Fed is now gone, you know, to deliberate ahead of the FOMC meeting. But I think the consensus must be building for some sort of a rate cut come June, if not before. And then, of course, we also got big tech earnings, which I actually think if you extrapolate Alphabet into this week, could be positive. So I think near term, I could see that momentum from last week continue.
I feel like that's kind of the consensus, Laura, right now, that, you know, from a tactical standpoint, bullish, but bigger picture. From a technical standpoint, maybe bullish, but from a bigger picture, fundamentally, it's really anybody's guess. That's like what Tony Pasquarello Goldman was talking about today, that the technical factors have finally tilted positive, but the fundamentals, like, okay, all bets are off.
Yeah, I think that's right. Investors are still looking for more clarity from the macroeconomic backdrop, and they're not going to get it. Even in a week like this, where we're finally starting to get some hard economic data that could give an anchor around some of the rapidly deteriorating business and consumer confidence, we're going to see a mixed bag of economic outcomes where consumers and businesses are pulling purchases forward to get ahead of tariffs. Does that mean things are as good as they look? Does it not? Investors really aren't certain. But I think what we can take from this environment are a couple of factors. First, alongside the volatility, we're starting to see asset correlations, the way that different asset classes would typically behave together, break a little bit. We're also seeing different parts of the world. You brought up structural themes, invest in a different way than they have in the past. That means for an investor that's facing a lot of uncertainty, you might actually say, even sitting on my hands, I might want to make some changes to adapt to some of those long-term themes.
Jobs report on Friday looms especially large. I mean, you could easily make the case that just given the questions that exist about the state of the economy, the state of the trade war, and what sort of hiring practices are going to be on the receiving end, if you will, of all of that uncertainty, that you get a pretty good read, even though it's a lagging indicator, because it's for the month of April. Liberation Day was a while ago at this point. You get a pretty good read.
Yeah. I would argue, Scott, this is probably the most important data point that we get is on the labor market front versus some of the Mag 7 earnings. And the reason for that is if you look at everything else out there, like inflation, for example, which is forecast to be 2.6% year over year. If you look at consumer confidence, it has been in shambles. If you look at business sentiment, it's really all of that is lining up for a rate cut. What's not yet made the Fed think they are due for a rate cut is the labor market. But if you see the number of job openings on Wednesday weekend, if you see some cracks form in the initial jobless claims, which, by the way, I would expect, given what we're hearing about the shipping channel, and if all of that gets solidified with weaker than expected payrolls report, I think that really solidifies the case that the Fed needs to move. And by the way, given what we just heard about the budget deficit and the funding gap, you know, I think this is the playbook of the administration is raise the tariff revenue. In the meantime, get the economy to be in such a shape that warrants a rate cut.
It's interesting that, you know, now we have the Dow up 100. It's been a pretty volatile tape. Not a huge range, but volatile nonetheless. Is this the environment we're living in for a while now?
It's absolutely the environment that we're living in. In fact, I think the 10% that we've moved up, 10, 12% from the lows, puts us in a position where volatility is, in fact, more likely to operate on both sides. And I think that's true not only for the equity market, but also for the bond market as well. When we think about the 10-year Treasury yield, I expect a wide range of outcomes between 4 and 5% over the next couple of months. And when it comes to some of the data and the evidence that we're looking at this week in regards to that, I completely agree with Anastasia's analysis on what the job market might bring. I don't think we're going to see it yet. I don't think we're going to see real evidence of change yet, because if I think about in the portfolio companies we're talking to, the businesses that we're talking to, trying to get a sense of what's going on, there's so much uncertainty that you're not even sure that you should fire yet. You might not be hiring, but you're not making big changes to your business, especially only a few years after the pandemic, where hiring and sort of repositioning folks was so challenging. And so where I'm particularly looking for evidence is actually in earnings growth, because if we start to see a slowdown in earnings growth relative to recent history, that might tell us that employers are starting to make changes in a way that might not show up in the job creation.
I mean, at this point, isn't that kind of your base case? In other words, how could we not end up seeing changes for earnings growth? I think we already are and expect even more, no?
That's right. Especially, I mean, the cyclical backdrop was heading there anyway. You're absolutely right. And so I would expect to see more over the next couple of months. Whether we see that on Friday, I'm not so certain.